What does Warren Buffett think about the stock market? Today we are diving into the insights from one of the most successful investors of all time, Warren Buffett. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. Let's dive right in. Ready to learn from the Oracle of Omaha? Today we are talking about the insights that Warren Buffett has on the stock market. This video is going to empower you with the knowledge on how to become a successful investor based on Warren Buffett's strategies. And at the end, I'm going to share some life tips from him that are also going to help you improve your money situation. Warren Buffett is currently 92 years old and has a net worth of over $116 billion. So I think there are definitely a few things that we can learn from his investing strategy. Warren Buffett advocates for a value investing approach in the stock market. He looks for companies that are currently undervalued relative to their intrinsic worth. So he's looking for companies that are priced lower than he thinks they should be. He also focuses on the long-term thinking, which is what I like to do as well when I am investing. If we can take that longer-term approach, we are going to make a lot better decisions with our investments. Warren Buffett also invests in quality companies that have a sustainable competitive advantage. He also understands the importance of investing within his competence. He invests in companies that he actually understands. And I personally do this as well. I made the mistake of investing in something I did not understand. I invested in whole life insurance and ended up regretting that. I did not understand how whole life insurance worked. It was a lot of documents to cover for the whole life insurance policy, and I just didn't fully understand. And then once I started doing more research, I figured out that that policy was not the best type of investment for me to do. So I ended up canceling that policy later and losing thousands of dollars. Had I just not invested in that policy in the first place, I would not have lost thousands of dollars. And I could actually invest in something that I understand so that I could make money with that investment. And that's what Warren Buffett does. He invests in companies that he fully understands. He does his research, and if he understands it and thinks it's a good, usually undervalued company, then he's going to make that investment. And he also advises investors to be patient and really focus on that long term. When we are purchasing companies at a good price, we want to realize that they are going to go up and down over the short term, but in the long term, they are going to rise. And that's only if we've done our homework on the companies and we understand the company. If we are just going off a hot tip from someone and we don't really understand the business we are investing in, then there is no guarantee that is going to grow over time. And of course, things change in the world, so we want to keep an eye on those companies we are investing in. And if we decide that they are no longer a good investment for whatever reason we originally purchased that company for, then we can sell that company and put our money into another investment that's going to be better. One of Warren Buffett's mantras is to be fearful when people are greedy and be greedy when people are fearful. And I really like this mantra because when people are greedy, usually the price of the company or investment is rising. And so people think, oh, I need to buy this company. It's gone up and it will continue to go up. And so they buy it at a really high price, and then the price drops. And then they become fearful, so they sell that investment and they lock in their losses. We actually want to do the opposite. When we see that good companies are on sale, when they are at a really low price, we can invest in those companies and watch that investment continue to rise over time. And then when it does, we can sell that company if it's time for us to sell, or we can just continue to hold that company for an even longer term. And Warren Buffett has said that it is really hard to consistently time the market. He advises against trying to predict short-term movements within the market, and instead, of course, focus on that long term. He also has the perspective of keeping a rational rational mindset when you are investing, and also to be patient and not follow the trends in the market, that we want to be more disciplined with our stock market investing strategy. And here are a few tips from Warren Buffett. Number one, we talked about this. It is to invest in what you understand. Stick to the businesses and the industries that you are familiar with. That way you can make an informed decision on whether or not you want to invest in those companies or in those industries. I know I have seen success with this for me. When I'm talking with other people, sometimes they'll bring up stocks that are more healthcare related, and I don't really know that much about healthcare, so I'm not going to invest in those companies. But since they have knowledge about the healthcare industry, they are able to invest in those companies because they know what those companies are about. I do know about the technology sector, so I invest more in that industry and have seen success with that. When we get caught up in taking a recommendation from someone else and we don't understand that industry or that sector as well, then we don't know what the trends are. We don't know what the companies actually do. So we aren't making an informed decision. We're just basing our decision off a hot tip from someone else. And if we see our investment start to drop at one point, we might get worried and sell that investment. But if the person that actually understands that sector knows that it always dips during the summer and they're actually stocking up, then we are going to lose out because we've sold that investment. So it's just important that we invest in things that we truly understand. And then the second tip is to be patient and focus on that long term. I talk about this all of the time. We don't want to get caught up in the short-term movements in the market and trying to make a quick win or become a millionaire overnight by investing in one company, right? We want to keep that long-term perspective and invest in good, stable companies or in good index funds that are going to give us that long-term wealth because we know that works. And then tip number 3 is to stay disciplined and avoid emotional decision making. When we base our investment decisions off emotions, we are usually not going to be successful with those investments. Like we talked about before, basing our investments off fear and greed is not going to be the best way to do that, because people usually end up selling when the price is low because they become fearful, and they're buying when the price is already high because they are becoming greedy. Be careful that you are not tying your emotions to your investments. These are a few different ways that Warren Buffett lives frugally. So his house is the same one he bought in 1958. This multi-billionaire does not live in a mansion like a lot of other billionaires or even multi-millionaires do. He lives in the same residence in Omaha, Nebraska that he bought in 1958 for $31,500. That's the equivalent of roughly $285,000 in 2020. And he has no intention of putting his home up for sale. He said, "I wouldn't trade it for anything." That's what he told CNBC. So that's just interesting that where he has so much money, he could definitely buy whatever mansion he wanted to anywhere in the world. But yet he continues to live in his same home for years after years. I think there is a lesson to learn here. When we see all of our friends or our neighbors upgrading their homes, we can be tempted to do the same, and we are probably not billionaires, let alone even multi-millionaires. So honestly, if we want to grow our wealth, then buying a new home all of the time and upgrading is not going to help us do that. Unless, of course, we are making our home work for us, if we are renting out a basement or renting out rooms, things like that. But just by upgrading our home, that is not going to help us make more money. And then another thing that Buffett does is to start his day with a cheap breakfast. We might assume billionaires brunch at the most extravagant restaurants, or that they have a personal chef. But Warren Buffett does not have either of those things. He actually goes to McDonald's. And he said if he's feeling rich, he'll splurge by spending $3.89 on a bacon, egg, and cheese biscuit sandwich. And if the market's down, he might spend $3.19 on a sausage, egg, and cheese sandwich. Or on a really bad day, then he buys 2 sausage patties for $2.38. And then he also washes it down with a Coke that he pours himself. So when you are looking at this billionaire and he is going to McDonald's for breakfast and spending not even $4, that is pretty crazy, because he could go anywhere he wanted to, have whatever he wants for breakfast, and yet he chooses to go somewhere so inexpensive. I think this is another lesson that we can learn, that we don't have to spend a lot of money on food and go to expensive restaurants. We can actually eat at home if we wanted to. I know for me personally, I eat oatmeal pretty much every day for breakfast. I like oatmeal, it's simple, it's very inexpensive, and it tastes good. And then another thing that Buffett does is to buy reduced price cars. So although some CEOs drive around in $1 million cars, you'll likely find Buffett driving something much more modest. And honestly, he could buy, again, whatever car he wanted to, and not just one car. He could buy 5 cars, 10 cars, how many ever cars he wanted to. But yet he sticks with that frugal mindset and has a very affordable car. So again, another lesson that we can learn from this billionaire, right? We don't need to be buying the nicest car. We can have a modest car that runs well, and we can actually just pay for that car in cash. We wouldn't even have to have a car loan. We could just buy something that's very affordable, save up for that, and then not have to have a car payment every single month. And then another lesson I want to share with you is that Buffett clips coupons. This billionaire is clipping coupons, which is still mind-blowing to me. And honestly, I use coupons. I don't spend hours and hours sorting through coupons, but if there are coupons that come in the mail, I quickly just scan through and think, oh, I go to that restaurant, or oh, I would like to try that restaurant. And so there are just a couple of coupons that I clip. And in talking about coupons, it's important that we have the right focus. We don't want to be spending hours and hours clipping coupons to save $10. Right? We would rather spend hours and hours learning how to invest our money to make it work for us and make thousands and thousands of dollars. And if you are looking to invest your money and you want help with that, I have a free masterclass where I go over how I can help you invest in the stock market. I will leave a link below in the description. You can click on that and check out the free masterclass. Those are just a few lessons we can learn from a man who has a net worth over $116 billion. Comment below and tell me the one lesson that you found the most important from Warren Buffett. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified on when I post new videos. And if you want to see even more awesome content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.